It's been a while now. I feel a little rusty today. I spent a lot of time yesterday and today doing a lot of high frequency trading to get myself back in sync with price action. And I'm going to apologize to you up front because you're going to hear probably, I know it's disgusting, but I have seasonal allergies. And if I don't have a throat lozenge in my mouth, I'm going to not be able to speak. So with that, if you do hear it clicking around in my mouth, I apologize, but it's the best thing I'm going to be able to do because I've tried to keep myself from losing my voice all day, but it's really, really close to being hoarse. All right, so with that out of the way, the PDF files that you saw started yesterday, and my intention is to do that for Mondays, Tuesdays, Thursdays, and Fridays. And then Wednesday, like we have here, the midweek review, I'll do a commentary, short and sweet, but there'll be a small lesson in it as well. There won't be one today because I'm a little late getting to everything because we had two of my computers go down. I had to try to troubleshoot that before I started this video. This weekend's video will be the long one. So the reason why I'm doing the PDFs, and I already know some of you don't like it, okay? I already got hate mail already from the students saying, I don't like the PDFs. It's funny how a lot of people really want PDFs from me, but when I start doing them, I hear more complaints than I get compliments. Not that I'm looking for compliments, but as I stated in the videos that you should have watched from last week that I supplied in advance in my absence over the Passover holiday, which I hope you all had a pleasant week last week. I needed the rest. I had two little issues with the server I had to go in and take care of, but otherwise I enjoyed the rest. The PDFs are really to help me save time because I'm burning a lot of time making additional videos. And what you don't realize is when I do the videos and I find those that are leaking or reselling, they're being supplied to me as soon as they get them in their hands. So when I get an email to ICT Mentorship Inquiries at gmail.com, which none of you should be using as correspondence. I know there's a lot of you that think that's the email address because that's what you enrolled through, but it's not. It's innercircletrader at gmail.com. I'm going to add a autoresponder tomorrow morning. So that way it's a reminder to you if you email me in the future about something about the mentorship or you have a question about billing or whatever, that's not the email address to reach out to me with. It's innercircletrader at gmail.com. But the watermarks, as soon as I find someone that's leaking, I know right away that that group has a leak in it. And then I split that group up into 20 more groups. And I break it down further and further and further each time I find a new watermark. So it creates a lot of work for me. And I already have 6 people really close to being exposed. And I know you hear me, but it still doesn't make a difference because I've already laid down a landmine field ahead of me. So even if you leak later on, I'm going to know where you're at. So I'm asking you all just to remember that when you first subscribed here, you were going to get the monthly content videos. Plus, you're going to get the midweek and the weekend video. So the things I do for you daily are in addition to and just bonuses because I feel like doing it. They're useful and I want to continue having interaction with you on a daily basis, but it doesn't require me to make a video that I have to make dozens of times now. So to help alleviate all of that, I want to keep the videos, which is mainly the things that are circulating around. I want them just to be the midweek and the weekend commentary. So it kind of like squeezes the supply on those that are reselling or sharing. And invariably someone's going to have it in their hands and they're going to do something stupid with it. They're going to try to sell it themselves and the leaker's account's going to get exposed. And I already busted one guy with both of his accounts. Yeah, he had 2 accounts and I got both of them. So there is a reminder here that these daily log entries are for you to kind of like calibrate what you're looking at in your chart versus what I'm seeing that's most important. Now, again, it's just a way for you to condition yourself through my eyes, the way I see it. It's not you're failing because you don't have what I have in my chart, but they are important markers for you to be constantly reminded on a daily basis, Monday through Friday, while the markets are trading. And it's really quick. It doesn't require, like what you're getting right now, a lot of the jawboning. It cuts right to the point. And I know you want me to point out certain things and talk about, well, it might do this, it might do that. That's not necessary, because what will happen is you're going to, again, grow accustomed to me doing this for you daily. And just like right now, you had last week where you were separated from that. And a lot of you emailed me a lot and said, where's the videos? There's no more daily videos. And I had already told you all in advance back in January and February and throughout March that Passover week, I intend to just have 2 videos up, and there wouldn't be anything other than that. But you already have that sense of, oh no, I don't have what I've been getting, when it wasn't promised to you when you enrolled. And I'm not trying to say you don't deserve it or it's not something I want to continue. I want to continue, but I have to do it in a lighter capacity than I'm doing right now with all these videos. So you're still getting the same thing. You're getting the things I'm looking at in the chart, what's most salient to me. That way you can keep it in your chart and study what price does relative to those things. And it doesn't tie up a lot of your time. You also might be those individuals that are hungry for it every single day. You have a lot more free time, but there's a lot of individuals in here, mostly like this, that have businesses, jobs, family matters that tend to take more time than you might. Meaning, not everybody has free time to digest all the videos that's done in each month, and the daily videos when I'm doing them, and weekend commentary. Like, that's a lot. Like, if you really focus on how much time is involved in that, I mean, it's a lot of stuff. That's a lot of content to go through. And some of you feel like you have to completely consume it all before you get to the next month. And you don't have to. You stay up to date with what we're doing here. And I apologize. My staff was monitoring and managing the forum for me. I was just creating the videos the last 2 weeks. And they did not update the forum where you could clearly and easily find the April videos. They just kept putting it in where the March 31st, I think it was, the last March video. They just put it right behind that. And I started getting emails, what's going on? I can't find all the videos. But I fixed that. So hopefully going forward, we shouldn't have that problem again. But I just want to say thank you very much. Thank you very much for the majority of you. It was only a few of you that lost your mind when we had our server go down again. And I had to work on sending everything to the server. Some of you may encounter, like I had folks report to me that month 12 content had a lot of issues. So I went through and I debugged all of month 12, so it should be fine. If you do find a video that does not play in its entirety, or won't open up or something like that, this is how you help me. Just send an email, broken link, and I'll know to look at that link that you send me. Don't tell me where the link is. Send me the physical link, because that'll also tell me if you're pulling up an old link in your cache that hasn't been updated. So it makes it real easy for me to troubleshoot right there. And if it's not that, then I can go right into the link, look at the video, and then re-upload it. It may be simply a matter of something that the form on your end, because it's like a cookie that this form operates with, it's just a headache. It saves so many cookies, and your browser gets inundated with it, and sometimes it hangs on to an old one. And if I make changes in the forum, it won't reflect on your end because your browser hasn't updated to the most recent changes I've made to the forum. But I appreciate all your patience, and I appreciate your patience listening to this part of the video. So with that, let's go into this really brief discussion on what we've had in price action thus far for this week and what we did last week. All right, so we had the volume imbalance turn for fair value gap. up here. We traded up into that. Has receded, filled in both the volume imbalances here and here, traded back down into these down closed candles, which is one consecutive bullish order block. But this here is a mitigation block here, and I'm focusing on the body here, and then we traded down into consequent encroachment of that. I will counsel you, I'm not going to do it for you. Go to your weekly chart, and when you toggle your chart to weekly here, you're going to see that this trades back down into a closure of a weekly fair value gap. It goes right to it. And it's also overlapping with the mean threshold of that mitigation block there. So what I want to see is, do we trade back up to this candle's low during a kill zone and then reject that? Or do we trade through into this wick here and close this small little fair value gap and back into this bearish order block, which is technically a bearish propulsion candle? So we have the big candle, which is the bearish order block. This candle digs into about half of it, doesn't close above half. So that's your propulsion candle. If it does that, it should be very sensitive to delivering lower prices. But here's the thing I'm looking for. If it doesn't show sensitivity there, then this is probably going to keep going higher, and will look to be a complete closure of this imbalance, and then we'll probably attack this old high for the buy side liquidity, because we do have relative equal highs here with the signature that this is lower than the previous high. So this is a low resistance liquidity run signature and price. All right, here's the hourly chart for the dollar. And I got a lot of emails about this. Some of you report seeing this. Some of you don't report seeing this. I don't know why. It's just one of those things. That's why I put in the PDFs, that if we ever see something like this, we look through it and go back to the range. Okay, we're not really concerned with it. We have a small little sell side imbalance, buy side inefficiency, consequent encroachment of that. We traded to that there. Traded down, went after the sell side liquidity there. Traded down into the old low. Reaching in deeper, we rallied up a little bit. Small little imbalance in here, just about closed that in. And like I said, we want to see what we do from here. It looks like it wants to try to go up a little bit more. Even if it wants to go lower, I would favor it doing so. I don't want to see it stagnate or stay sideways like it is right now, because that would be problematic for Thursday and Friday's directional buys. In the 15-minute time frame, really nothing to speak of here. We do have a breaker, so we could see price come back down and maybe accumulate around that level and trade back up into this old low here, which is just about the middle point of this sell side imbalance, buy side inefficiency. So we'll see. Kind of iffy, 50-50 one way or the other where we're at right now. So I don't have a clear, this is where it's going to go, this is where it's not going to go. I'm waiting for more information. Let's go over to euro dollar. All right, here's the euro dollar daily chart. We have a buy side liquidity pool here, propulsion candle here, big up close candle, digs into half of it there, trades lower. We swept this low I was calling for a couple weeks ago. We swept that and moved back up into this bearish propulsion candle. Went a little bit above it, that's okay. Now we do have today's low and Monday's high. That creates a small little imbalance that price could come back down in. It doesn't need to completely close that in, but I'd like to see it make an attempt to do so. We're also in optimal trade entry. We're at a premium relative to this high, to this low, and sell side liquidity rests below here. There's a large pool of buy side liquidity resting right in here that does have me thinking that if we do take out today's high, in other words, this candle's high right there, if we take out that high, then we're going to go here. Otherwise, I'm looking for intraday trades only, looking for lower prices on euro. Why? Because I think it's going to try to get in sync with cable. Even though that the trade has been primarily today and yesterday euro pound, because dollar has been relatively sideways basically. Cable's been going lower and euro's been going higher. So that's a perfect recipe for euro pound to go higher. All right, here's the euro dollar hourly chart. And we have just a little bit of a imbalance that was left open here. I like to see it fill in some of this and then go lower. I don't know if it needs to come all the way back down here, but if it goes below, say this order block right there, if it goes below that, then this is a market maker sell model. Right now it's too early for me to tell. Sometimes when I'm looking at price, if there's things that I'm looking for that are very clear and not decoupled like we have right now, where dollars kind of consolidated, euro pound is the runner and cable's going one direction and euro's going the other, that's decoupling. Okay, that means there's no symmetry in the marketplace. That means it's cross pair manipulation. You have to be very nimble in these situations, because if you don't understand how to trade like that, you're going to get caught on the wrong pair in the wrong direction, and it's going to be very frustrating and you're going to lose money. So it's very important to learn how to observe that and not fall victim to it when it's in operation. It also makes it harder for me even to determine if this is a market maker sell model, because I need it to go below another discount array. If it goes below this down close candle, which is a bullish order block, if it goes through that, then I know I could get a run below here and maybe even run down below here. It's too early to tell. All right, here's the 15-minute time frame for euro, and we're at the bottom end of that higher time frame PD array. This is the discount level of it. Sell side liquidity has been tagged here, but I want to see again. I don't want to see it come down here and take the sell side liquidity to go higher. I don't want to see that because it demands more for that to occur and for me to trust it. I'd like to see it work inside of that range relative to that hourly chart I just mentioned. If it takes out this level of sell side liquidity one more time, it'll build momentum to go through that 60-minute bullish order block, which would set up a run below here. Let's go into cable. All right, here's the British pound versus dollar daily chart. We shoot up into a propulsion candle, which again here, last up close candle. We trade back up into it here. So you want to see sensitivity on that candle. It shows it today and yesterday. The market does have a sell side liquidity pool here and another one here. And if we get really accelerated on the downside for cable, we could look for this old low to be traded back into. But be careful with the consequent encroachment of the range between this candle's opening and the candle's low. Get that 50% level. That's your consequent encroachment. Extend that out in your own chart. If we do go below here, that's probably where it's likely to go. But I would expect it to trade through this low if it gets there, not just there. But that's one objective that you could look for. But ultimately, this looks, looking at it live with you, to me looks bearish. It wants to go lower. It's providing all the signatures for sell side and institutional order flow being bearish. So we'll be looking for this low and this low here Thursday and or Friday to be attacked. Let's go into the hourly chart. All right, here's the hourly chart. You can see market maker sell model, really sloppy one, but it's there nonetheless. Fair value gap here after breaking down, but look here closely. On the buy side of the curve, everything before the peak, any down close candle where they were buying and accumulating longs, carry that over to the sell side of the curve. You can see there's your sell with a premium array, which is the bearish sell side imbalance, buy side inefficiency in the form of a fair value gap. Trades there, breaks lower, attacks the sell side liquidity here, comes back up into the sell side imbalance, buy side inefficiency, trades to that, consequent encroachment twice, sells off, another sell side imbalance, buy side inefficiency, trades back to consequent encroachment, and breaks lower. There's a pool of liquidity here that this is most likely going to attack and trade to. There's no need or necessity for it to trade back up into any of this range here. So it should stay, if it's bearish, it should stay heavy in this rollover. And finally, let's look at the 15-minute time frame. Okay, you can see again, initial drop down, came back up quickly ahead of the New York session, clearing a pool of liquidity here. Small little imbalance, fills that in, goes over a little bit into the bearish order block, breaks lower. Fair value gap after market structure is shifting here, fills the imbalance, trades back up into the bearish order block, and then sells off. Imbalance here with the breaker. Breaker, imbalance, premium array. Where's it going to attack? The sell side liquidity here. It trades down into it. And that, my friends, is going to be it. If I talk anymore, I'm going to lose my voice entirely, and that's very frustrating on my end because you pay me to talk to you, so I have to preserve my voice. So I will talk to you by way of our daily log entry tomorrow, only in annotations alone. And if I can squeeze something into it, lesson-wise, I will try to do that as well. But just know that you're helping me help you by not making daily videos, but still supplying the same things I would have shown in the video with the charts. It's real quick, easy download, and it's something that you can print out if you want to, and you can mark up and make your own annotations on that if you want. But until I talk to you this weekend, that's how we're going to do things, okay? Please don't tell me you don't like them, because not only does it hurt my feelings, but it's not going to change anything, because I got to get these last couple people that are leaking or selling, and once I get them, then it'll free up more time for me to do what I've done in the past. Until talk to you then, be safe.